And for more, let's turn now to Cape Moody. It's time for business. Iran saying it's closing the Strait of Hormuz in response to Israel's bombardment of Lebanon.
Yeah, that could put a dent in what has been quite a relief rally on global markets for oil prices in particular, Francois, because the hope, of course, is that production and exports of oil and gas from the region could resume sooner rather than later. We did see that sigh of relief earlier in the day that we're not headed for an immediate escalation, even though there are still a lot of questions about just what any ceasefire might entail. We have seen oil prices plunge this Wednesday. The international benchmark Brent crude hitting its lowest level in nearly a month. It had dropped to just over $91 per barrel earlier on. You can see there just under $95 per barrel. US WTI following suit there. Just a reminder that 6 months ago, a barrel of Brent crude was trading between $60 and $70 per barrel. Those prices have risen some 50% since late February. U.S. oil prices are up nearly 70% over that same period. So even though we've got that dip today, we're still far above the pre-war levels. European natural gas prices have also dropped around 15% to 45 euros there. Again, just for reference, pre-war, that same contract was around 30 euros per megawatt hour. We are seeing a similar story on global stock markets. Asian markets jumped between 3% and 7% earlier in the day. The major European indices have now closed higher. The Frankfurt DAX soaring 5%. The CAC 40 in Paris not far behind there. Travel stocks were among the drivers here. Wall Street's also trading sharply up over 2% for the Dow Jones, S&P 500 and NASDAQ. Semiconductor companies have seen their shares rise. Micron, for example, up around 7%. Because they are very vulnerable to any supply chain disruptions. Well, a spokesperson for the European Commission has warned that despite this apparent breakthrough, the risks remain and that the energy crisis sparked by the war will not be short-lived. Earlier this week, the head of the International Energy Agency told Le Figaro newspaper that the current crisis was worse than those of 1973, 79 and 2022 combined. Fatih Birol said at least 75 energy plants in the region have been damaged, and he said more than a third of those are very seriously affected. It could take months or even years for that damage to be repaired. Many analysts say that Wednesday's so-called relief rally should be taken with a grain of salt.
Let's not forget that there is a lot of logistical backlog in the Strait of Hormuz that needs to be cleared up, and that takes a bit of time. And also, there's a lot of energy infrastructure damage in the region. So I don't think, even if there's a permanent ceasefire today, I don't think that we're likely to see prices falling, to $80 per barrel anytime soon.
Well, despite those warnings and the ongoing uncertainty, the aviation industry has also joined Wednesday's rally. Shares of major carriers like Air France, KLM, and United Airlines surging around 10%. Many airlines had cut flights and hiked fares in recent weeks as they dealt with high prices and disrupted supplies of jet fuel. However, the head of a global industry group has warned that shortages of jet fuel could linger for months as refineries struggle to make up for lost time. Brian Quinn has the details.
Across Asia, airlines have cut routes, hiked fares, and added refueling stops amid jet fuel shortages in the wake of the U.S. and Israel's war on Iran. With tanker traffic through the Strait of Hormuz set to resume during a 2-week ceasefire, hopes are high that the air travel sector will soon be back at cruising altitude. The International Air Travel Association, though, is warning that it will take time.
If it were to reopen and remain open, I think it will still take a period of months to get back to where supply needs to be, given the disruption to the refining capacity in the Middle East, which is a critical part of the global supply of refined products.
While the war had sent crude oil prices up by some 50% prior to the ceasefire announcement, jet fuel prices had more than doubled. Fuel is typically an airline's second largest expense after labor. The IATA says it's hoping refineries in China and South Korea can quickly resume exports once Gulf crude is flowing again. Meanwhile, Gulf airline hubs like Dubai and Doha have been severely disrupted by the threat of missile strikes. Gulf carriers accounted for nearly 15% of international flight capacity last year, a level impossible to replace by airlines outside the region. Those Gulf hubs are expected to quickly recover that capacity if the ceasefire endures.
That's all for now, Francois. I'll be back later on with, of course, the latest oil prices and stock market reaction.